Right, next on our list though is an interesting one. This is Verizon. So remember, in the United States of America, there used to be just like one huge mobile phone company that got split up. But then it sort of put itself back together again like Humpty Dumpty, and we ended up with AT&T and Verizon. Verizon, New York based and a dominant player, big mobile network as well as fixed line. And as you can then see, they are a big dominant player, but in a very competitive market for access. They then start to branch into the content arena. But big, eh? Market cap there, hey? $228.66 billion. 12.67 price to earnings ratio, so not super high rated. Dividend yield highish at 4.05. So just explain to the viewers of what the strategy appears to be here.
Yeah, because they recently announced that they're buying the internet properties of Yahoo, and that follows on from last year where they bought AOL. So they essentially are looking to put those digital properties together, and really that means they become content owners.
That's like, for many Americans, still the default pages they go to when they log into the internet.
Yes, so they got also a billion user plus Yahoo in particular.
Wow.
And really, I guess this is a foray into the digital advertising space that we've spoken about, where Google and Facebook are very strong. Verizon a distant third at about 4.5% market share after the Yahoo acquisition. And really, I guess from the management's perspective of Verizon, they are looking to own some of the content. They've also got a video platform, a video streaming platform, and looking to bulk that up and get users for that.
A couple of news platforms like their own Huffington Post in there, Engadget is in there, TechCrunch, which is like special sites that are focused on particular niches. Okay, so let's look at the share chart, because the other thing they did is around about 2014, they bought back a half that Vodafone of the UK owned in Verizon Wireless. So they're kind of backing themselves, doubling down, and they've got this Fios service, which is fibre optic to the home as well as a 4G type product. So it's a battler, but look at that, it has put its head up. I must say the market appears to like the strategy.
Yeah, so that's the interesting point.
Did I mention the business metrics earlier? I might not have. There you can see them, $228 billion. You got a price earnings ratio. I think I did, in fact. Yes, and the dividend yield is higher. That's the specific number of cents. So the question really is, would you buy them? Because in the US, you can get either AT&T to provide you connectivity. You can get a Comcast fiber line if you're in one of the dense city areas.
Sprint as well.
Sprint, there's T-Mobile, there's some of the other cable suppliers, Time Warner to get your video feeds, and then you can get like Dish and all sorts of other things. So it's not like you can just say, well, we're going to dominate and then we'll put up the prices. That's not going to work.
Yeah, so you can see obviously the mobile space is highly penetrated, competitive, a little bit ex-growth. The valuation metrics look fairly good. I guess the question is, yes, will these add-on acquisitions, which actually together still only make up 6% of revenues, are going to make a difference to the proposition and are going to work together, I guess, the access and the content in terms of growing both sides of the business. I like the valuation, so I'm hot from that perspective.
You know, I actually owned some of these before because I liked, when I went to America, to own shares in the people whose services I was providing. So I tried to get AT&T and Verizon, and then I sold Verizon because when you arrive at JFK, you can't actually get a Verizon SIM card. I was shocked, horrified. What's going on? But they do have a dominant position and a better network in certain key areas than AT&T has. So you're going hot this on a valuation call.
Yeah, and I think also the use of these mobile platforms will increase the growth of data, which is partly where they are as well.
Okay, sounds fair. Let's go hot on that.